Hello traders, hello everyone, my name is Grega Horvat and welcome to our new week ahead video analysis. Blake is away, so I will cover him. Probably he is too busy with Christmas gifts. So I will walk you through a lot of major currency pairs and also including crude oil, S&P 500, metals, even DAX. Okay, so let's get started. Where euro dollar has been in a very strong downtrend for the last 12 months or so, and it looks like that there is still room for more weakness now, especially if we look on the higher degree time frame charts. I just think that this trend is still fully intact here from 2008 highs, and I would not be surprised to see even a retest of these 2016 levels. However, we always have to go step by step when looking at the Elliott wave counts. So if I'm on the right track here, then probably we are forming here a triangle. It's an ABCDE pattern, and now you are still in a wave D. So ideally this weakness will resume after a wave E rally. Now wave D is already trading at some very nice supports here around 61.8% fib level, and also you have some swing highs back from 2020 levels. In the short term, however, there is still room for more weakness before wave D may finally stabilize, probably at the start of 2022. So here I'm looking for a triangle. It's an ABCDE pattern, and now as you can see here, it's still on ongoing correction in my opinion, but overall I think that the breakdown could occur in the next week or two. So watch out for more weakness here. Also, as I said, short-term weakness is expected, then maybe some price stabilization, but overall euro I think will remain weak. That's why I'm looking actually for this triangle, because as you know, the ECB is not seeing any hikes in 2022, while you have a completely different policy from the Fed. So I think that this central bank's policy divergence will actually keep the limited upside for the euro. Now let's take a look on cable. Now cable is also in still here in this very deep three wave corrective decline, in my opinion, which can be counted easily in three waves. Here on a daily chart, we are most likely going to retest this lower trend line of this channel. So still not seeing any bottoming formation here, especially because on the 4-hour chart you can see that recently we rallied only in three waves. Okay, so this was an ABC move. It moved back into this very strong resistance here, horizontal one. So I'm thinking about more weakness in the very near term, and then let's see what happens. Also, as you know, Bank of England is hawkish, so eventually I think that again this sooner or later these lows could be established. Now let's take a look also on Aussie dollar. Now Aussie dollar here, just to give you a fresh look here on a monthly scale. I'm trying, because each market has its own personality, I always look at the past price action and reaction and trying to figure out what will, based on that data, what will happen next. And here what I'm looking at is very nice recovery each time when we reach these recession lows. It has occurred here after 2000. You have seen a three wave recovery. Then after a great recession, another three wave recovery. And after this COVID crisis, I'm expecting another three wave recovery, because so far you have only one leg to the upside. So I'm thinking about more upside after this retracement. Also, you may have very important head and shoulder bottom formation here. So I will be expecting more upside probably in the second part of 2022. But for now, this correction is still underway. Now, looking at the monthly chart, this could be wave B. Okay, so wave B could travel all the way back to these previous left shoulder swing levels, or even slightly lower. But eventually, what I'm expecting more weakness is because on my primary chart here, I'm looking this to be 5 waves down for wave A, meaning that trend is bearish at the moment, which means it should see more weakness after wave B rally. Okay, so watch out for this corrective recovery. Maybe could trigger some upside at the start of 2022, but overall I think that this wave B could see more weakness next year. Okay, but I'm not expecting anything dramatic. I just think that this is still a counter trend movement against the previous very strong impulsive rise away from 2020 lows. Now looking at the 4-hour chart, if we can assume that maybe this fifth wave is finished, then obviously we are already expecting higher prices. Here we have seen a break out of this downward channel. As you can see, waves 1, 2, you have this 3, 4 and 5, meaning that whenever you have these 5 waves down and a broken trend line, well, that's important indication that maybe this impulsive structure is completed. And then I look at the higher degree time frame charts and I realize that maybe this could be a final leg of this higher degree 5 wave cycle for wave A. So maybe we're already in a wave higher degree wave B, so I would be expecting maybe some supports here in the near term. It looks like that based on the recent price action, this could be a flat formation, so very strong support clearly at 70.80. Invalidation level in this, based on this short-term outlook, is at below 0.7 psychological level. Also, I'm looking at this RSI line. This could be quite important maybe for this current dip for prices to stabilize. Of course, you will have to watch also the commodity markets and stock sentiment for this to be bullish actually for this Aussie to easier continuing higher. And now let's take a look also on Swissie. Now Swissie is quite interesting, I should say. I mean, technically clearly suggests that we could resume lower, because notice that this was very sharp drop, clearly impulsive action if we consider or respect that the upcoming recovery was much more choppy, slow, overlapping. So this was an impulse, this is a correction. In fact, this recent recovery has stopped at 78.6% fib retracement from where we have seen an impulsive decline, as you can see here on the 4-hour time frame charts. So I would be expecting more weakness. Now this weakness sounds quite interesting if we consider that Swiss franc is acting like a safe haven when you have stocks in risk on in risk off mode, and then you have also in risk on mode dollar should be weak, so dollar Swiss again could be moving to the upside, to the downside. So it looks like a win-win scenario for bears. But then you have here S&B, meaning that they actually in their recent meeting they noted that they are watching currency values, meaning that they could intervene anytime at any prices. So this is quite tricky, especially if you consider where the euro Swiss is currently trading. Okay, so this is what is actually holding me back from trading any Swiss pairs at the moment. And what I'm seeing here on the monthly chart, okay, you can see a very big 5-wave decline in progress, and it looks like that we are already here in a final 5th wave. So maybe this, based on timing, we are not far away from new interventions, especially if we consider or respect the past policy actions. So I'm really curious what will happen next year here. I just think that if euro Swiss will see more weakness, that sooner or later this market will see something similar like we have seen here back in 2011, 2014 or 2015. Okay, so that's for dollar Swiss. As I said, technically looks very good, but then you have the CNB. I just think you have to be very careful here. Now let's take a look also on dollar yen. Now dollar yen here probably completed this 5-wave recovery from 2021 lows. I've been looking for this recovery actually since start of the year, but I think that now we should be very careful out there. We have these 5 waves up with a 5th wave moving out of a triangle, meaning that this was the final leg within a higher degree structure. Also, you have this divergence, which usually suggests that 5th wave has reached its peak. Also, you have this broken trendline support and potential head and shoulder stop formation here. Okay, of course the neckline should be broken before this head and shoulders pattern is actually confirmed, and you would be looking for lower targets. But if I respect the Elliott wave principle, if I respect and try to merge this with the basic technical analysis, I think that dollar yen could see more weakness. Also, looking at the 4-hour time frame here, I can see a very nice impulse down, while the current rise is quite overlapping. Okay, so it's not impulse. This was an impulsive reaction. This is then a corrective reaction. So I'm expecting more weakness here. Also, you have to consider what treasurers are doing, and if we take a look here on, this is actually a March contract, and you can see that this market actually completed the 5 waves of decline, and then we rallied out of this downward channel, made some pullback, and again now we are probably ticking higher here, either for a wave 3, maybe just minimum limited upside for a wave C, if maybe this will be corrective recovery. But in either case, I think that there is room for more upside, and this could trigger more weakness on dollar yen. Not only dollar yen, I think that actually a lot of yen crosses could see more weakness. And if we take a look here, for example, on euro yen, you can see on the latest price action here, we have ongoing 5-wave drop, and looks like that we are headed for more weakness because of a 3-wave rise here for a wave 4 back into this resistance. I've been tracking this one quite closely, and now we are headed to new lows for a wave 5. And also pound yen, notice 5-wave drop, and now you rallied only with 3 waves, and always you have this very sharp and strong directional move, but any bounces or rallies are only made by 3 waves, not in 5 waves. Well, that's when you should aware of more potential weakness. So I think that this more weakness could be coming for wave C, maybe wave 5, if we consider that this could be also wave 4 as I labeled on an alternate scenario. But in either case, in the short term, I think that you should be aware of more weakness here. And now let's take a look also on metals. Firstly, gold. Now, gold still, I mean, yes, we have seen some short-term volatility, but overall, you have to make a step back and to realize where the big picture is telling us. And you can actually see that this is still ongoing recovery, but the very tight range here looks like a consolidation. So I'm still tracking this as a wave 4 that will ideally send prices higher to new all-time highs next year. So I'm looking this to be maybe a triangle, but triangles can be sometimes tricky. It can occur in a wave 4 or even wave B of wave 4. Okay, so I am tracking actually 2 interpretations here. Now, first and primary is here on the left. You can see an A, B, C, D, and E in progress. Even if this is bullish interpretation suggests limited weakness, well, this is not completed pattern yet. Why? Because each leg in a triangle should be made by 3 waves. This was a 3-wave drop for a wave C. Okay, this was a 3-wave rise for a wave D, so I'm expecting also a 3-wave structure for a wave E, meaning that we could see more weakness here towards 1700, towards this trendline support, before this triangle can come to an end. Okay, also I have this, as I said, triangle can occur in a wave B. Also I have this alternate scenario where this triangle is already completed wave B, and even this one suggests more weakness. So based on 2 interpretations, I think that there is more weakness coming after current rally. Okay, so just be aware of that, and then we will try to decide whether this was a triangle in wave 4 or wave B after we see the upcoming weakness. Okay, but overall I think that next year we could see limited downside, and that actually mark that these metals could actually going to see a recovery. If we suddenly, let's say we suddenly rally away from here and close above this wave B swing high, which is at 1920, then I think that more upside could already be in play. Now let's take a look also on silver. Now, silver here, big picture, what is probably the most important for me here is that you had, yes, a very strong downtrend, but notice that this recovery was a very strong one, 2020. It broke very decisively through 2021 resistance levels, which could become a very nice support now. Okay, so I'm looking this to be an impulse, this recovery from 2020, and now you have a counter trend movement in 3 waves. So I will be looking for limited weakness here, but maybe not just yet. Why? Because here on a daily chart, Okay, I'm tracking a flat correction. It's a 3-3-5 pattern. Okay, three waves down for a wave A, then you have this complex correction recovery for a wave B for a new swing high here, and then you have now these 5 waves down in progress, which could be an ending diagonal for a wave C. Now ending diagonal has a 3-3-3-3-3 substructures, meaning in each leg you should see 3 subwaves. Okay, so what I'm expecting is now also a 3 wave drop for a wave 5 before this market may finally stabilize. Okay, so unfortunately we still do not see a bullish price action. We are just going to track this wave B corrective recovery. Okay, so yes, in the near term maybe some more upside could be seen, but I will be expecting another weakness here early next year, probably before market may stabilize sometime in 2022. Okay, now let's take a look also on crude oil. Now crude oil was very volatile this year. We have seen a very nice recovery here, clearly in impulsive fashion. Okay, you have these waves 1, 2, 3, 4, and wave 5. Okay, you have a very strong indication that uptrend is in play and that we will probably see much more upside in crude oil in 2022, maybe 2023, towards $100 per barrel. But for now, we are just slowing down. So it's another bear market. It's just temporary corrections, which always occur on a higher degree and lower degree scales. So what I'm talking about now, or tracking, is actually 3 wave decline underway. Here was wave A. I'm looking for a rally into wave B, which in my opinion could see a little bit of more upside, and then watch out for this wave C drop, which will ideally stabilize at $50-$55 per barrel next year. Okay, so I'm expecting more sideways and then even bearish price action. I will not be looking for immediate bullish reaction back to this above $85, because I think that this correction has just started. Now, if we look at the 4-hour time frame charts on the intraday basis, let's say next week, yes, we could see some more upside, but the important is that the previous drop was very impulsive and in 5 waves. So I think that current reaction higher is going to be limited. I'm looking at wave A. Now we are probably still in a complex wave B, which could be maybe a triangle here. Okay, or maybe something more complex, but overall I think that we could see more upside towards $61, maybe even 79 is very important resistance area for this wave B recovery. Okay, so watch out for maybe some slow price action in the next few weeks, with room for more upside towards much stronger resistance levels, but then just be aware of this wave C. Overall, in second part of 2022, that's when I would be expecting a recovery. So that's for crude oil. Let's take a look also on dollar Mexican peso. At least in the short term, if crude oil could see more upside, well, dollar Mexican peso could be quite interesting, maybe from a trading perspective on the short side. Okay, of course, you have to watch what stocks are doing. So here on weekly chart, what I'm looking at is a major top formation here. Okay, because we have seen a break out of a triangle, and then you have a very strong bearish reversal, clearly in impulsive fashion. Okay, you can see this impulse right here. Okay, so that was a 5-wave movement, and more importantly, the upcoming recovery is in 3 waves. Okay, or if you look at subdivisions, in 7 swings. Okay, so this is a corrective personality. This is a corrective move, and I've been looking for this resistance here around 22, and not just looking that, I was looking at it as very closely. In fact, market reversed from it very sharply, okay, in the last 2 weeks. So in my opinion, that's a very strong evidence or confirmation that this market could see more weakness next year. Okay, so also, even if you would be, let's say, bullish and you would be expecting a 5-wave recovery in impulsive fashion, which is very directional movement, well, these pullbacks in a wave 4 should not retrace into the territory of a wave 1 or wave 2. But this is exactly what has happened here. We have seen a retracement all the way back to this wave 2 correction. So this overlap actually confirms the fact that bears are going to stay strong, because bullish counts interpretations were invalidated. Okay, so I'm thinking about more weakness here, and as I said, this could be quite interesting, at least in the short term, if crude oil is going to see more upside within that wave B. And now finally, we will take a look at S&P 500 and DAX. Okay, now the S&P 500 obviously in a very strong bull run. It's looked like a mania cycle here for an extended fifth wave. Still, we could be very closely to an end of this major wave 3, so I would not be surprised if we see big corrective recovery, but again, corrective recovery. I clearly do not want to call any important top formations. I just think that the next, let's say, 20% dip could be again very interesting opportunities on the stock market, because each time when the market has made a pullback, we have seen a very nice strong recovery. So I clearly want to stick with this type of a price action. Okay, however, for now, for me, the price is just obviously too high, especially from an investment perspective. Of course, from a trading perspective, you may have a different approach. Now, looking also at the daily charts, I have two wave counts here. Now, the first wave count is actually showing us the primary scenario of sub-wave 4 in progress. Okay, we recently moved to new all-time highs, but quickly have seen a reversal lower. Also, we are moving into this holiday season, so I'm thinking about the slower price action, meaning that there could be a tight ranges. And if that's going to be the case, that's perfect timing for this wave 4 to unfold. Okay, so that's why I'm looking this to be my primary scenario. I'm looking for potential flat, maybe even triangle if we will stay sideways here. Okay, but in the short term, however, there can be more weakness coming because wave 4 is still incomplete. Also, I have another interpretation, the second wave count, which shows that maybe this current or recent price action is a top formation for this wave 3, and we will see a wave 4 much deeper. So you can see the difference between the wave counts, but both suggest that in the short term we could see more weakness. Even with a bullish interpretation, if this is a flat or a triangle, I think that we could see more weakness towards 4,500 or so. Okay, while I have here this very aggressive bearish wave count because of an ending diagonal, and as you know, in such case this wave 4 could be much lower. But as I said, in the near term, that could be some very interesting developments towards lower prices. Again, from a trading perspective, this could be quite interesting for some, but from an investment perspective, I just still think that these monthly levels are something that we should look for. And now finally, let's take a look on German DAX. It will be final market now. So German DAX is in a very strong recovery on a monthly scale. We are running here out of this bullish channel, meaning that this recovery is very strong, and we could see easily more upside. Looking at the primary wave count here on the daily chart, however, we are currently just slowing down. It could be only a 3-wave drop. We will see what will happen, but I think that here with the latest price action, we have formed a top here, and that we are now probably just in a wave B corrective recovery. So watch out for wave C, maybe to even retest this 15,000 area. Okay, traders, thank you very much for attention. I hope that you enjoyed this video. This was probably one of the last videos for ForexAnalytix. So if you have any questions, I'm always available on Twitter, and probably I will also show up in webinars a few more times before going completely to end this year and close it. Okay, traders, have a good week ahead. Bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.